Continuing our video series about risk, we now turn our attention to how harmful inflation can be to our wealth. Inflation is an important type of risk that affects most of us, and it contributes to the chances of not meeting our financial goals. Year after year, inflation gradually, or sometimes quickly, reduces our wealth. A useful illustration is that a 65-year-old man or woman probably paid more for their last car than they did for their first home. Looking forward, that means that $1 today will purchase much less 20 or 30 years from now. With even just 3% of yearly inflation, $1 million today will be worth $400,000 30 years from now. And since putting our money into cash or a savings account is not enough to make up for inflation, we have to take the risk of investing in order to maintain or grow our wealth. 2 to 3% of yearly inflation is considered healthy for the economy. Too low inflation, which is called disinflation, or even worse, deflation, is a sign of an unhealthy economy. Too high inflation, on the other hand, is also detrimental. And inflation that is out of control is referred to as hyperinflation. And the term may remind you of pictures of people trying to buy a loaf of bread with wheelbarrows of almost worthless money in Germany in the 1920s, or today's sad reality in Venezuela or Zimbabwe. At its inflationary high in November 2008, Zimbabwe had a daily inflation rate of almost 100%. That means that prices doubled every day. A person who considered buying a $30,000 car would have to pay $3.6 million for that car if they waited just 1 week with the purchase. While we fortunately don't suffer under such inflation rates here in the United States, it's still important to understand the erosion on wealth from even small levels of inflation. And money that is not invested in a long-term and diversified portfolio is particularly vulnerable. So it's important to invest in such assets as stocks, bonds, and real estate in order to maintain and grow our purchasing power over time. We have a library of videos on other financial topics on our website, and we invite you to take advantage of them as part of your ongoing financial education. Thank you for your time.